Don Luskin, Trend Macro Chief Investment Officer, and our housing bear, the president of A. Gary Shilling and Company, and a regular columnist for Forbes magazine, Gary Shilling. There's the Wizard of Oz. There he is. That's Gary in that house. Don Luskin, the Gallup poll data show that despite the home price problem, people will spend in Christmas. And my view is when we get to January and February, we'll cross those bridges when we get there. Right now, Frank's saying good spending, despite the crash in home prices.
Look, I agree. If there's a spending recession going on, somebody better tell my wife. You know, there's no stopping there, I guarantee you, nor with anybody I know. And I'm not worried about oil prices. If you go back and look at what's happened for the last 5 years, you can see that annual per capita expenditures for energy are up about $800. That's the bad news. The good news is that disposable personal income over the same period is up $8,000. Right. All right, so give me a break. We're going to have a great Christmas. We're going to have a great Valentine's Day. We're going to have a great Easter. Don't worry about it.
Steph, here would be my difference in what Vince just said, and that is that I do believe over the past 10 or 15 years, I think that was the time frame you used, that the movement in the dollar has not reflected necessarily changes in monetary policy or in the inflation outlook. However, recently, I think it has, and that's the difference between the 70s and the 80s and 90s, that in the 70s we actually had a big move that was reflective of very easy money, and I think that's happening again today.
Don Luskin, do you share Brian's view?
I do. In fact, my research comes up with a little bit different results than Mr. Reinhardt's. I show that over the last 10 years, when the dollar is up, about 60% of the time inflation's down. When the dollar is down, about 60% of the time inflation's up. So there is a relationship. It's not the strongest relationship in the world. But I think Brian has it exactly right. I don't think it takes a lot of analysis to see that what the dollar has done has occurred in time and logically in response to extreme easing of the Fed, in response to our credit crunch.
We have some
it's an inflationary solution.
We have some, you know, Don Luskin, Mr. Reinhardt suggested the Fed is not going to be quick to ease. Now, I know you threw the towel in the other night. I was really hoping for a hard money Luskin. I don't want the Fed to ease at the next meeting. Brian Westbury doesn't want the Fed to ease. Now it's left to you to exercise leadership. What's your new take?
Okay, all right. Mr. Bernanke, if you are listening, do not ease. However, I know you will ease. So, Mr. Reinhardt, I will bet $1, you bet a donut. I guarantee they're going to ease.
Don Luskin, may I please have a good reason to buy stocks, please?
Well, yeah. How about because they're incredibly cheap? How about because bond yields are so low that only a crazy person with inflation doing what it's doing and taxes being what they are would hold bonds, which are a guaranteed loser on an after-tax basis? You absolutely have got to sell bonds. You have absolutely got to buy stocks. The risk premium is an all-time high. You got to buy them, buy them, buy them. Now, Larry, I have a question for you. What do I have to do to get a little film signature on here when I show up as a guest? I don't want the Wizard of Oz and the flying house and everything. Can I get something?
We're going to get you a bar of gold. We're going to have a big bar of gold. I don't know. You did such a great job the other night. But
Brian, write-downs tell you they overstated previous profits. That's all it really tells you, isn't it? It tells you I mean, look at all the write-offs in the real estate area and in the financial area. It says they way overstated their earlier profits.
Okay, Gary, that's not true. They're just doing their best to mark-to-market securities on their balance sheet that have declined in value in the last couple of months.
It says that a lot of earnings they had earlier, which were phony baloney in retrospect.
Don Luskin,
and by the way, the cockroaches keep coming out of the woodwork. This isn't kitchen sink, it's cockroach.
Let me just follow up with Don Luskin. Hold on. Don, your point about mark-to-market, to me, that's a good thing, not a bad thing. And incidentally, even if you get $400 or $500 billion worth of write-offs, which is the highest estimate I know, that financial sector last quarter made over $500 billion in profits. So what you're really seeing is one quarter wiping out a lot of profits made in the prior quarter. That doesn't mean they're all going to hell in a handbag. That doesn't mean they're all going to go into bankruptcy. It just means they're taking some hits here.
Right, and a lot of this stuff is just sort of zero-sum games where one of these investment banks has to bet with another investment bank, so one's losses is another's gains.
Why do you think the write-offs are over? I mean, the cockroaches keep coming out of the woodwork. Look at Citi. Look at Merrill Lynch. These guys, within 3 weeks of their announcement, don't know how bad their CDO write-offs are going to be. I mean, you see,
what makes you think they're not over then? What gives you some kind of perfect crystal ball when the CEOs of these companies don't know?
Don Luskin, you're an optimist. You like the valuations. you're saying when you take a look at the earnings and you take a look at the 10-year bond rate, discounted future earnings, you've got good value. What's your favorite top couple of sectors right now in this strategy?
You've got to buy energy, you got to buy industrials, you got to buy materials. Those are in the sweet spot of revived growth and inflation. We're going to have to deal with both, growth and inflation, so get them both.
And Stephen Abrams, where are your sweet spots in the investment strategy?
Don just gave them to you.